Welcome back to another video, and in this video I'm going to talk to you about all things related to Launceston and why it may be a good opportunity for you to consider as your next investment location. And Launceston is located in Tasmania, so you may be thinking, why the hell am I talking about Tasmania? Because it has performed so well during the 2019 to around 2022 period, where it arguably overperformed, and at this point the 10-year average is at 8.1%. And for most people this would completely eliminate the location for them because they solely look at historical trends and historical data, and they believe that property only grows at 7% per annum. However, there are good reasons for us to consider Launceston as an investment location. Now, of course, like always, do your own due diligence, but I'm going to break down this location piece by piece for you and what suburbs that you should consider and that should be on your watch list as a possible opportunity. And like always, do your own due diligence. Now, the first thing you're going to notice with Launceston when you look at SQM research is that it has overperformed over the past 10 years, performing extraordinarily well during the 2018 to 2022 period, and it's gone through quite a bit of stagnation. And when you actually look at Launceston on HTag, and by the way, for those of you who don't know, I do have a referral code. You get 25% off on HTag plans, so go check it out and use that code. And when you look at Launceston, you can see that it went through a bit of a dip after the 2022 period. After all the hype left and the market cooled off, it went through a dip and then it started to flatten out. However, I believe at a certain point that this market has now completely bottomed out, and we are looking at very early signs, and I need to make this very clear, it's very early signs of a potential recovery. We are seeing in the past quarter positive movement, which is good for us to see as an investor. And there are a couple of suburbs that I'm going to go through specifically for you to consider and you to do further due diligence on. And the first one I want to go through is Youngtown. Now, this one has a $630 median price, but you can find properties around $550,000, and the good quality ones just edge up a bit higher than that. And it's also possible to get close to and above 5% yields in this area. I'm going to show you an example of one. And when we look at Youngtown, and like I mentioned, you can see that it went through a huge rise, went down, and has now flattened out and potentially at the start of a recovery. And when you look at the data, it has wonderful socioeconomics, a decent ersatz score, but rented to owner occupier ratio is at 20%, which means that there is a lot of owner occupiers in this area living here, right? It's not an investor-led market. Affordability is sitting at 35 years, which is good, but we are seeing the data trends. When we look at it, stock is completely depleting. Days on market, demand is increasing and skyrocketing, and there's virtually no building approvals in this area, and also vacancy rates are falling. So Youngtown, on the data side, is looking as one of the best locations to consider in Launceston. And remember, this is a cooler market, so you don't have the competition levels of Albury or Bendigo or Dubbo or Cairns in regional Queensland or Perth. It's a much cooler market. In a very similar fashion, you have nearby Kings Meadow, which is also looking very, very strong on the data. And you can already see in the past 12 months, it's grown about 3%, which means this market is on a good recovery. Now, one thing I failed to mention is that when you look at the rents, they haven't been rising at all. The past year is at 0.79%, which is absolutely shocking. And in Youngtown, I think we have a similar story of only 1.87%, which isn't good at all, right? We want to see rents rising, but that's just one factor. And when we look at the supply and demand metrics of Kings Meadows as well, it looks a little bit more stable compared to Youngtown. But from what I hear on boots on the ground, it's also picking up a little bit of steam, and I expect the data to come through in the following months ahead. And you can see on days on market, the demand is starting to pick up, and stock levels are starting to look pretty decent as well. Following on from Kings Meadows, Prospect Vale is another opportunity for you. When you start to look at Prospect Vale's data, a very similar fashion of huge rise during 2018 to 2022, dip, and now we're starting to see a recovery. Rents are not rising, which isn't good, but socioeconomics is very strong. 3 ersatz score, 26 rented to owner occupier ratio, which means a lot of owner occupiers want to live here. It's not an investor market like up in Tamworth, for example. Stock levels are dropping and demand levels are increasing as well, and vacancy is pretty tight, sub 1.5%. It's very tight, so you should be able to find a tenant fairly easily. And one other market that I also want to talk about is Summerhill. When you look at Summerhill, you have a buy price of 576 with around a 4.5% yield. But I know you can do better if you find the right sort of asset and property. In the wings of a recovery as well, the market is picking up. Rents have not risen, which is not good, like I always have been saying. However, socioeconomics is strong. And when you look at the supply and demand metrics, supply is dropping. There is less and less stock coming on the market, and the demand metrics don't look great on the data side of things. But from when you look at the properties, you analyze how long they're taking to sell, we are seeing more positive signs. Demand is starting to increase, and there is opportunities there for you, and vacancy is incredibly low at 0.89%. So these are four markets that I would tell you to consider: Youngtown, Kings Meadows, Prospect, Summerhill. Now, if Launceston suddenly picked up and all the markets started booming and it became a hot market, then suburbs like Newham, Mowbray, Ravenswood, they would all start to pop up as well in the data metrics. And like I said, this is a very, very early market. So you are going against the grain. But I did say the same thing with Bendigo, 8 months ago before it became a hot market. So if you, as an investor, a shrewd investor who has patience, who has the cash flow to be able to hold a property, who wants to look at markets with possibly a 5% yield, sub 600,000, around $550,000 market, Launceston could be one that you want to be considering. And if you didn't know, I do have an exclusive Australian property investor community helping with over 280 members, all helping each other out. It is a steal of a group sharing locations, sharing ideas, sharing properties. And if you aren't in this community, you are going to be left behind. And if you're already lost with all the courses, all the BA information, if you're confused about the Facebook property groups, then you need to be part of a dedicated property investing community that is able to help you, that has resources, that has weekly community calls, that has exclusive content for you to utilize, share, learn, and understand, all for a single monthly fee. It is an absolute bargain when you really think about it. Instead of taking out your family for a nice dinner, invest in the community, invest in the people, invest in the resources, and you will come out on top. And remember, when you invest in the community, you're investing in your family and you're investing in the future. So make sure you join up right now because it is an absolute no-brainer, like I always say. But let's carry on because I still give valuable information on my YouTube videos, because that's what I do. Now, so far I've talked about the locations of Launceston, but I'm a long-term investor and I look for locations that are good for long-term holds. And I think Launceston is one of those locations. Now, it's never good for us as an investor when you look at the data behind it, you see ups and downs, right? You don't want to see huge cyclical movements, but since Launceston overperformed so damn well, it had to go through a period of stagnation and a period of decline as well. But it didn't go through a decline like a cyclical industry does, like a mining town or a one-trick pony town. This has gone through a small decline, which is acceptable for me as an investor. And when you look at the data behind it, it has an economic output of 12.5 billion with a GRP of around 6.4 billion dollars. And this has been increasing, which is a great sign for us to see as an investor. Population has been relatively stable, not really growing, not really declining, which is good and bad. It has its pros and cons, but that's a trade-off that I'm willing to make. I usually like to see a little bit of population increase, but that's okay. And when we start to break down and we look at the industries and economic diversity of a regional location, this is what I like to see: healthcare, retail, trade, education, training, construction, etc. No sector is above 25%. So it is a very reasonably diverse location for you to consider. And when you go one level deeper and you look at the exports of the region, again, it's not hinged on only one industry. You've got manufacturing, you've got healthcare, you've got financial services, electricity and gas, construction, etc. It is very diverse, with no sector, once again, taking over 25%. So for me, as an investor who thinks about the long term, Launceston would be one of those locations where I would consider for the long term because it's got a good economy, it's reasonably diverse, it's got a decent population size of around 70,000 people, not big but not small either. So it has all the right factors in that fashion. And you can go a little bit deeper and you can look at the total exports by industry sector. And when you break down manufacturing as well further into it, you can see it's metal production as well as food product manufacturing, with healthcare being its largest sector nonetheless. And you can look at all these sites, by the way. These are all free sites. You can check it out yourself so you can do your own diligence as well. But I want to go a bit deeper as well. regarding Launceston because I do my research with these locations and I talk to people on the ground about these locations. And Launceston is one of those locations where you really want to be focusing on more on the south side of this. So the Summer Hill, the Prospects, the King Meadows, the Youngtown, all this south side is a more owner-occupier, higher socioeconomic areas of Launceston. Now that doesn't mean the north side is not going to grow, but if I had to pick a property, hold it for the long term, find good tenants, then I'm going to look towards the more south side of this location. The locations up in Morebury, Ravenswood, Waverley, these are sort of the lower socioeconomic areas when discussing with a property manager, and they're the ones that sort of attract the rougher crowd. Now, of course, you can do your own checks and see if you want to invest there. That's up to you. But if you had to pick, this is where I would be looking, down in this area. But once again, this area is not completely perfect. Even within the south side of Launceston, you'd have public housing pockets, which you ideally want to be staying away from. So this south side of Prospect Vale, around this Borough Street, Chris Street, Vale Street, you want to be very careful about where you actually buy. And if it is next to a public housing, then you want to be avoiding it. In a similar token, in Kings Meadows, you've got a pocket of public housing, which you want to stay away from. And Youngtown is pretty secure. But once again, you want to talk to a property manager about the specific house that you're looking at and make sure it is not in the way of or not close to public housing. And one thing I do also want to point out is that Launceston does have quite a big river. When you look at it, you've got the River Tamar over here, which is very close to some suburbs like Invermay. And when talking to a property manager, flooding doesn't really happen in Launceston, but if it does, or a 1 in 100 event happens, most likely Invermay is the one that's going to be flooded, or that's the one's going to be underwater. And so generally you want to be staying away from these flooding pockets of Launceston. And if you buy anywhere near Summer Hill, Prospect Vale, Prospect, it's quite a hilly side, a lot of elevation, so you're unlikely to have those properties ever flooded. So it is safe from that perspective. And once again, we have a lot of factors pointing us towards the south side of Launceston as our ideal location. And when you're in a cool market, you have the option of choice. Hence why, if you're a counter-cyclical investor, you can consider this location. And just to show you some properties as well that you can look at, there are opportunities there for around $550,000, something like this. A nice little property in Prospect, 3x1. Now, it's not a 4x2, but a 3x1 is still a good investment opportunity for you to consider. You've got another option here in Youngtown, and there's also more in Kings Meadows as well. Like this one is 549, and you've got here 349. I assume this is close to some public housing, hence why it's very cheap. Do your due diligence. But the 550 budget, the 550 to $600,000 budget will get your property into Launceston, into this market. And when you have a look at this property here, $545,000 buy price, very neatly renovated, very nice looking property. It's simple 3x1, but it still does a job. And when you start to look at the rental properties in Youngtown or in and around Youngtown, you can see one 3x1 going for about $460 in rent. And when you look at surrounding suburbs, South Launceston's getting $675. This one is $585, a very neatly renovated property as well in Prospect. Kings Meadows getting about $440 for a 2x1, around $500. So really you're looking around anywhere from, I would say, $500 to $550 for a property like this. And so when you put it on the $500 mark, you're getting roughly about negative $15,000 in cash flow per year and around minus $1,500 per month on a 12% deposit, by the way. And if you increase this to a 20% deposit, it makes the numbers slightly better. So not perfect by any means, but still good nonetheless. And you're getting around a 4.5% to 5% yield on a $550 rent bill appraisal. So you can make the numbers work for you. And remember, this is before any tax deductions if you buy in your personal name, but the numbers will depend on your situation. So it's definitely possible to get a decent property in Launceston at an acceptable price with an acceptable rent, but it's a much cooler market. So there is opportunity there for you as an investor. And one thing with Tasmania, when you invest in there, they do have land tax. So that's a consideration to take. So if you have a land tax on accessible land value, say the land value is $300,000, for example, it's about $800 in land tax, which is quite honestly negligible. It's so small. It's a maths calculation. It's something that I just factor in and continue to consider that location to invest into. Now, the one other thing that I want to point out, stamp duty is more in line with Victoria. It's on the higher side. So for a $550,000 property, you're paying around $21,000 in stamp duty. In New South Wales, it'd be around $15,000. So there is that difference as well to consider when choosing Tasmania as a location to invest into. But overall, there is opportunity within Launceston for you to consider. It is a much cooler particular market, the market has overperformed between 2018 to 2022. It went through a downturn and then a long stagnation, but now it is in the forms of a recovery. It is value-based investing. It is very counter-cyclical investing, but this location has good fundamentals for a long-term hold. So if you are looking for a location that isn't hot, like Albury or Cairns or regional WA, and you want to choose a place to consider, then this could be a location for you. There are trade-offs to be made, but at some point you're going to have to make the right call for your own personal circumstance. And if you have any questions at all about this location or about any suburb, then you need to be part of the private community. We are here to help you. So if you're lost, confused, unsure about where to invest, you need to join the private community because we will help you. There's over 41 reviews for you guys to go have a read of. There is so much value jam-packed into it. It is a steal of a price. Till next time, thank you.